Hello, and thank you for joining me. My name is Randall Hart. I'm one of the construction accountants here at Business Consulting Accounting and Fast Easy Accounting in Limited, Washington. We are the contractor's bookkeeping and construction accounting services provider. Today's video is going to be a quick overview of a disturbing trend that we're seeing. And this video is being made in late 2013, and we're just coming out of the recession. Things are starting to improve. However, there is a problem, and the problem we're seeing is a lot of these bad bookkeepers work for a variety of construction companies, and frankly, they help those construction companies go bankrupt. And now they're out there looking for new places to land and cause the same problem again. And I'm going to show you a little trick and tip how you can discover one of the most glaring signs that you indeed have a bad bookkeeper. Talk is cheap, but I'm going to show you how to do it yourself. You don't have to ask the bookkeeper. I want you to go in and do it yourself. It's real simple. But first, I want to give you just kind of a quick background on a little bit about accounting. You see, accounting started in the year 1500 with a Franciscan monk named Bacoli. And he sort of developed what we call today the double entry system of debits and credits. And that's the last time you're going to hear about that from me on this video. So what happened was in the late 1800s, we moved to an all paper-based system. And what you see on the screen here is what's called a ledger or a general journal. And that's the big book that's open, and everything was done manually in ink. Put a transaction in, assigned it to an account with a memo. And then a little later, we started using subledgers, and that's the little red book that's on top. So every month we would close the books on that little subledger and put it into the journal, which is the bigger book. Now this is fine, and this is the way a lot of us are taught. Matter of fact, when I went to university for accounting, this is exactly how I was taught. We didn't have calculators, and there wasn't the advent of the computer. That was quite a ways back, over 30 years ago in the 70s. Now, as it happened, we all know this, in the 80s, desktop computers became ubiquitous, and of course, I got one, and I've been using them ever since. And along about mid-1980s, we started using a program called CMS, and it was a specialty software just for contractors built on DOS. It was a great program. It was about $60,000 and about $300 a month to maintain it, but it was still a great program until a little program called QuickBooks came along and totally blew that thing out of the water. QuickBooks, $100, and it works beautifully. So what happens is that I had to go through a transition phase out of paperbooks into the DOS version of CMS, and then transition into QuickBooks. And QuickBooks has a journal built into it, but it seemed pretty obvious that you really didn't need it, and you really couldn't use it if you wanted to get job costing. And so I had to retrain myself again. I retrain constantly on how to do bookkeeping without using the journal entries. So what happens is there's a little process I like to call the employee skill mastery paradigm, and we all go through this. So the first level obviously is freshman. I don't know that I don't know a particular subject, so I will listen and learn for a little while until I think the instructor is stupid. We all do this, myself included. I used to, not any longer. The sophomore stage is, look, I know that I don't know a particular subject, but I know more than the instructor, who is obviously stupid. At some point, we wake up, become juniors. Well, you know what? I know well enough to do it by concentrating and paying attention. I was wrong. The instructor does know a lot more about the subject. And this is where 95% of all bookkeepers and accountants stop. They go about 2,000 hours of training. That's all they think they need, and they never go any further. And this really is about what you get in college degrees and universities. It's about 2,000 hours of training, and you walk out there and you think you know everything. Well, what happens is those of us that continue with our education will go on even further, as I did, and begin to understand QuickBooks and construction accounting. And that's about 2,000 hours of training, not just punching the keyboard, but going to classes and learning things. As a senior, I see this at level 4. I know it well enough to do it in my sleep. I was impatient, and now I respect the instructor. 1% of all accountants and every trade out there, about 1%, have the 10,000 hours of training. This is what I call the mastery level. I thought I knew it all. I discovered the journey has just started. And let me tell you, I have over 10,000, way over 10,000. I won't tell you how many, but it's way north of 10,000 hours of training. And every year, I devote at least 100 hours, sometimes more, to additional training and classroom instruction. So if your bookkeeper or your construction accountant is not getting past that 95%, if they're not continuing to refresh themselves and learn new things, it's costing you money and you just don't know it. So what happens is, and we've seen a lot of resumes. Now I made a fake one here. This isn't a real resume, but you'll get the idea. Want to be a bookkeeper, dedicated learner for 2 weeks. I've heard this too often. Well, I've done Excel, Word, and different things, and I've had about 2 weeks experience. Well, that's not what we're looking for. You're a high school graduate, went to Pink Floyd University. We don't need no education. They partied hardy, had a lot of fun. They may have attended a seminar. They may have watched some videos, did a few lessons, took a bookkeeping class, got bored, enrolled at community college, learned accounting, and stayed with it for a month. Very common. Okay, and what they're looking for is a minimum wage plus all I can embezzle. That is not a joke. When I'm saying that all I can embezzle, I mean, I'm sad to say, this is what's happening. We're seeing it quite a lot, that the bookkeepers are really desperate, so they're going to work for a construction company, especially, and they're embezzling tools and equipment, materials, money. They're taking goods, real common, they're taking toner out of the office, and they're selling it on Craigslist and online. They'd like to get to extended vacation, they'd like to get bonuses and full medical and dental and retirement package, and they really want someone to babysit and spoon feed them bookkeeping skills. Okay, how can you tell if you have one of these type of people? Well, you may already know it, but I want to give you a little insight and a way you can actually see for yourself, and you don't even have to ask the person to do it for you. Now, I'm going to show you two versions. I'm going to show you the 2013 forward and 2012 back. So I'm starting 2013 because that's the dividing point where it changed. They did a different user interface in 2013, but it still works the same. I'm going to show you 12 as well. I want you to do this. Open your 2013 or whatever QuickBooks you have and go to Company. Put your mouse on Company. Left click one time. Bring the mouse down to Make Journal Entries. No, you're not going to make any entries. Yes, you're going to see the truth. Left click on it one time, and here's the next thing I want you to do is when it says list of selected journal entries, I want you to click that little drop down and make sure that all is checked. Now what we're going to look at is the quantity. Now this is a sample file I've used for a while, and I put 3 transactions in so you can kind of see what they look like. But in the normal circumstances, we have very few, if any, transactions, and the most we ever have really is about 2 a year. And those are the closing entries we get back from whoever did the tax preparing. Sometimes we'll use a journal entry to identify those sort of things. But that's it. There's no need to journal entry a truck loan or a payment, beginning balance, and I see an awful lot of credit cards being journal entered. That's a red flag. And what I hear a lot is, gee, I didn't want to take the time to put all those transactions in that credit card in the QuickBooks. It just seemed like I was wasting your time. The translation in one case is not. I didn't want you to see all the different places I used the company credit card and I'm embezzling. Not always the case, but it is the case more often than not. So I'm going to open up the 2012 QuickBooks, and it works very similar. Now 2012 back to about 2000 is going to look like this. If you have something before 2000, then you need to call me. But what you'll do, anything from 2000 to 2012, you'll click on the company icon. You'll come down the same thing again to the Make Journal Entries window. You'll left click on that one time, and it's going to pull up this report. Again, if you would please, click on this, make sure the All button is checked. That's it. That's all you do. Then you just click and left click here so we get it to pop back. Now, again, I put 3 journal entries here so you kind of see what they look like. And it's just these 3 here. If I open up a QuickBooks file and I see these journal entries, I know right off the bat somebody was trained old school and never updated their skill sets, because these shouldn't be here. You see, the problem with journal entries, you cannot get job costing. It doesn't exist. Forget about it. So if you're a contractor and you need job costing or work in process, or you're using schedule values, any of these things, if you're trying to use a G702, G703, or a pay application to track against QuickBooks, and you're doing multiple invoices, this is not your friend. This will cost you a lot of money, because if it's, in a lot of cases, it won't even record where you're spending money at. So it's very dangerous. We see a lot of contractors have gone out of business because of journal entries. We catch a few of them before it's too late. But again, if you're seeing this in your QuickBooks, please, please, please give us a call. Let us see if we can help you. We can be reached at 206-361-3950, or on the web at www.fasteasyaccounting.com. Well, thank you very much. I hope this has been useful, and we'll talk to you later. Bye.